Well, I want to wish everybody a terrific morning. It's good to see everybody on this nice rainy day here in Long Island, sunny day in Michigan, sunny day in Arizona. Um, and as we talk today, LAFPN is going to continue to do these virtual meetings. Um, Many of you have joined the organization, which we appreciate. More than anything, we need your funds to keep going, keep marketing, and keep doing this. So if you haven't signed up yet, would appreciate if you're interested to look into that. We've been doing this virtually now for a while, and we hope to go to live meetings at some point, like everybody else. So again, welcome. Today, we're very fortunate to have Bruce Kletsky talking to us from his car in Michigan. Um, Bruce works out of Chicago. He works for a very large international company that focuses on R&D tax credits and is a big service to CPAs and attorneys and helping their clients with some innovative tax incentives. And with that, Bruce, I don't want to steal your thunder. Take it away.
You're good. You're doing good. Good morning, everybody. Nice to see everybody. Nice to meet everybody. I am in right now. I'm in Upper Michigan, playing at a meeting some friends to play golf. I have no internet. It's no internet or Wi-Fi has been it's been hell to find something. So I'm in my car using someone's else's internet at some restaurant. Most of the restaurants aren't even open. So this is kind of strange, but hopefully this will work. But anyway, it's I'm the managing director of a company called the FI Group. FI Group is a large global tax consultancy out of Paris and Barcelona. They have, over 12,000 clients. They're in 12 countries. They generate about $1.5 billion a year for their clients. And their main focus has been on tax incentives, mainly R&D all over the world. Most of our clients are international. My role is I'm the managing director for the United States. And my background has been, I've represented 500-600 companies, and I help qualify the R&D credit and identify other tax incentives. And what I've done is I developed a team of about a dozen people, and what they are, they're engineers, attorneys, software, tax people, and we help companies maximize the R&D credit. Okay. Purpose of today's kind of discussion is going to be, what is the R&D credit? Why is it so important? There's so many misconceptions about the R&D, and I'm going to try to simplify it. So you're going to be experts. This is R&D 101. Number one, R&D has been around since '81, and the Reagan administration initiated it to help companies develop technology, keep jobs in the United States. And when this R&D was developed, what happened was it was so difficult for companies to get the credit that only the largest companies in the world qualified. You had to watch things explode and be very scientific. What has happened is Congress changed the definition of R&D over time. Okay, now any company that has a business process improvement, process change, that is called R&D. Okay, so guess what? Almost any company except maybe some service companies now qualify. Okay, so it's the government did something right. I don't say that very often. It's very bipartisan. It's permanent. What we look for is understanding any type of customization, any type of technology, testing, failure, um, software, internal use software that runs machinery. Guess what? That's all R&D. And the R&D is it's a 14% credit that offsets income taxes paid. Okay. If a company cannot use the credit because they have not enough taxable income, have losses, it will carry forward up to 20 years. Okay. Also, with the new laws, you can go back 3 years. And I think maybe even longer if they have losses. And you could true up. Okay. What I've seen, it's not very risky anymore. We have no audits going on. I know we're wonderful and all that, but in IRS focuses on a lot of other issues, transfer pricing, international issues. So it's not very risky. You have to have documentation. That's the key to an R&D study. It's called a nexus requirement, associating people to business activities. Okay. So what we try to do is we take an approach. We understand our clients' business operations instead of compliance. We want to know what their initiatives are. We want to know why their customers hire them. And all those activities are R&D. Okay. Something else that has happened is startup companies. Startup companies, typically, well, they don't make any money. But what happened is the laws changed. Any startup companies defined as a company 5 years old or less, the R&D credit is applied to their payroll taxes. That's an immediate benefit. And with the CARES Act defers it, but you have to pay it back. Guess what? This eliminates it. So a company that has 5 or 10 employees, oh my gosh, they're getting a 6-figure credit. So and if they can't use it all, it carries forward to the following year. So that's an incredible benefit. And there's a lot of startups. So, okay. Now, what type of companies typically qualify? Manufacturing, food, pharmaceutical, any software company, software development, internal use software, chemical companies, sometimes marketing companies, architects, engineers, construction, logistics. I can go on and on. So it's incredible. And that's the message today is if your clients don't take advantage of it or have in the past, look at it again. Okay. I work closely with CPAs, attorneys, financial professionals, banks, trying to help their clients obtain these credits. Typically, how we would, when we get clients, most of our clients want contingency work. So it's based on performance, but like we could do anything. It doesn't matter. I make the decisions, and it's not about me anymore. It's what the client wants. So typical companies, I would think anywhere between 5 million and 200 million. That would be called a sweet spot. I've done billions. I've done companies that have 1 million. So it's very generous. That's the message. It's been around a long time, and a lot of times I see companies already doing the R&D or did it in the past, but it's do it again because the laws have changed. So it's an incredible incentive. Again, the government, I think about 50-60% of the companies that qualify take it. So that's a lot that do not, or they're not aware of it. They think they don't qualify. So that's kind of, my message today is, sharing that information. If I could be a resource or compare or, provide, an assessment to see if it makes sense for somebody, it's cool. I got a whole team to do it. And I have international capabilities. Our international team got 1,500 employees. So we're one of the largest in the world of doing tax incentives. We do other tax incentives, but the focus is on R&D because it's so robust. So are there any questions?
I actually have a few. So
Okay.
Neil, why don't you voice yours, and then I may hit them with 3 or 4.
No, it's great. I just, how does your firm get paid, basically? How does that, what's the rules of engagement?
What we do is typically right now is contingency. What we'll do is we'll negotiate with the client, and I used to say here we got 35% or whatever, but that doesn't work anymore. I need to find out what the financial situation is of our client, and so I'll negotiate every deal. So our fees typically would be, seems right now 15 to 25%. Okay.
That's on the sale? That's on the sale of the credits, or is that just in developing the package?
No, that's on the utilization.
Good.
That's what they utilize. If they do not utilize, I don't get paid.
Okay.
Utilization means actually the net benefit depends on their corporate structure. If it's an S corp, it flows through the shareholders. LLC through the members. C corp, goes to the corporation. So I take a look at the whole picture, their whole financial picture, working closely with their CPA because that's their trusted advisor. Nobody knows me from Adam yet, so that's why I build a relationship with the CPA or attorney. So 100% of the time.
All right. I had a couple other questions. Is there a threshold, a minimum amount that you have to have before you can take the credits?
No, there is no threshold. No.
Okay.
I do. I have a threshold just because I don't want to waste their time. So, but I look at $1 million. I look at $1 million payroll, which is a $5 million company. So.
All right. Come the end of the 20 years, is there an evergreen transaction that you guys do? Or, I know I did that with foreign tax credits, where you would swap out from one country to another to keep the credits going.
No, this is U.S. No.
So use it or lose it, right?
Yep.
All right.
So, and it becomes an asset. If a company sells, it's an asset that goes with the company.
That's great. And I have a company that's developing food products,
Okay.
and they spend a lot of their budget on developing and perfecting the process of putting the food recipes together. Is that something that you can get R&D credits for? You did mention food companies.
100%.
Wow. Thank you.
Yeah, and doesn't even have to work. Yeah, you get rewarded for failure. And a lot of times what I see is companies only talk about things that work. They don't talk about what doesn't work.
Yeah.
So it's up to me to kind of get information out of them to find out what transactions internally don't work, because you get rewarded for it, I guess. So.
Now, from a perspective of 14% credit, how does that equate to the tax deductibility the same? the
So
same
correct. You get both. You can get an R&D deduction and you get an R&D credit.
Okay, so this is the proverbial slam dunk if you qualify.
Yes, sir. Yeah. I mean, if you're trying to calculate the credit for a client, what I do is I identify, I get an employee roster. And in the employee roster, I find out, I go by titles. I mean, I've done this enough to where, if it's a production person and all that, then I want to find out how much time they spend on, customization, development, testing, engineering, blah, blah, blah. And then there's a whole calculation when you do it. The net benefit is 7%. Okay. So if you have $1 million in payroll, 7% of that is your annual credit. And it's annualized. So you do it over and over and over again every year. So it's not one time. So that's the beauty of it. You keep doing it.
So this works hand in hand with what we call business succession planning, because very often we bring everybody in, look at their same roster, and we start developing, this is what this person does, so that we can make the business succession plan. So it's basically it's the same scope of review.
Oh my God, yes. Yeah. I mean, it's just, you gotta, these companies gotta take it. Even if they don't use it, you could, it becomes an asset. So, and it doesn't take, nowadays, it doesn't take very long to do. So.
Very informative. Thank you. Anyone else have questions?
Yeah, a couple questions there, Bruce. In terms of you talk about the labor costs, outsourcing wages. You can use contract labor, correct?
Yes, sir. Yep.
But it has to be U.S. based, correct?
Yep. Yeah. Everything has to be U.S. based. It's the biggest driver of the R&D is wages, software, sometimes capital expenditures, supplies that are related to an R&D process. Those are all R&D expenditures. Contract wages, up to 65% is used.
Right.
Okay. The key is it has to be United States, U.S. Box 1 wages.
Right. You would
What were
mention.
you saying?
Sorry.
Good.
I was just going to ask, what is the international aspect of it then, if you're saying it all has to be U.S. based?
Well, what I have found is, I mean, for the FI group, since they have so many clients, most of their clients are in Europe, Asia, South America. A lot of them have U.S. subs. So we do their U.S., France, Spain, South America. We do their R&D for multiple countries. And there's different laws and implementations.
But it's based on U.S. payroll, though, I guess.
Yes, sir. It's it has to be a U.S. company. A lot of software companies have their software developments in another country, in India or whatever, and I can't use that. So.
Couple other questions. You had mentioned earlier that you can get both the credit and the deduction. That's by taking the reduced credit. There's also an opportunity to take a more enhanced credit, but you lose the deduction.
Right.
How was that calculation figured in terms of the break point where it makes sense to?
Yeah, I mean, you got options on how you could take the calculation. I mean, you could, if you take the reduced, there's no add backs. If you don't take the reduced, you add back to income. So
Right.
So it's there's variables. What we don't get into the tax aspect of it. I mean, we're not preparing any tax returns. We're preparing Form 6765. That's the R&D form. Then how it's calculated, you work with the CPA to find out what method best fits them.
Right.
And that's how we determine our fees, whatever's utilized. So, and if it's a flow through, it flows through to the shareholders. Sometimes there's risk on the shareholders, because if there's passive shareholders, I mean, it may increase their income tax. So we got to find out, it's what the risks are. A lot of times on flow throughs, we won't go back. We won't go back as many years as allowable, because you have to amend. And you have to, besides you amend the 1120S, you have to amend perhaps the 1040. So, it could open up Pandora's box. So, but all I'm trying to do is just provide the R&D aspect of it and see what happens.
So from an R&D standpoint, how do we identify the time period in which R&D ends and normal product maintenance and tweaking begins? Separate the point of technological feasibility, I guess. How is that?
Yeah, I mean, it's done annualized. I mean, every year every year's a new year.
Right.
You do it by business activities or business projects. Okay. And what we want to do is interview or identify what the business initiatives are. I mean, what the scope of the R&D activity is. I mean, it doesn't, it goes conception to completion. Even if it's in the middle, every year you can get it. So we just need to find out what activity. A lot of times a misconception was to do R&D, you got to identify all the projects of a company. Okay, and if you're familiar with R&D, you've heard that term. There's nothing in the regulations that talk about projects at all. All you have to do is understand the business components. Business activities. That's all we want to look at. The IRS says you could do a sampling. So all these new regulations simplify the process. If anybody works with architects and engineers or construction companies, there's new regulations that just came out last year. I've seen double the credit for those type of companies. Okay, because it's before it's R&D was based on how they got paid. That's been thrown out. So it's that's a huge area now. So
That's interesting.
Yep. What other companies does anybody work with, or a lot of times now service companies. A bank. A bank is basically a software company. Marketing companies, all the technology, web development, apps.
Can you give an example of one that you were successful with?
On what type of industry?
Service? If you have a service industry?
Yeah, service. Would construction company be a service industry?
Sure.
Maybe. Well, here's an example for a construction company, which is really neat. A construction company that makes asphalt. Okay. In order to get a contract with the government, they had to develop a new kind of asphalt. So there's trials, and they spent millions on in order to get the contract. They develop new formula, new materials, and they got an R&D credit for it. So for other service companies, it's called internal use software. Internal use software. If you have to, in order to control your inventory, you had to develop a software program to manage your inventory to have controls. If you developed it internally, you could even buy an outside software program, but if you enhance it and change it internally, that's internal use software accounts.
So setting up the interface is a R&D.
Yeah.
Interface between the purchase software and what you're using internally.
Yep. Yeah. A lot of times that may be, or sometimes that may be risky, but I want the fact pattern before, if you just buy an internal, if you buy a canned software program and just, the company you buy from makes the changes or enhancements, I can't use that.
No.
But if it's changed internally, I can.
So I have clients who work in ITAR, International Trafficking in Arms Regulations. And in ITAR, you have to register through the Department of Defense. So there is a software that they have for licensing.
Mhm.
But my clients manufacture and set up their invoicing and all those through a customized program of their own. And when they integrate with that program, basically to filter down the information into licensing, that is what I called an interface. And I think that would qualify. Sounds like it would.
I agree. Yeah, it's
Yeah,
technology.
but could it be as easy? I'm sorry, I apologize. Hi,
No, go. Yeah.
this can't be as simple as putting together an Excel spreadsheet and manipulating data that way. I'd consider that to be some type of an internal software development, could it?
No, that's tough. What the criteria is there has to be experimentation. There has to be uncertainty of an outcome. It has to be a new or improved business component or process. Technological in nature. These are the buzzwords that identify the true R&D. I mean, it's broad, but those are the official criteria of it.
I read a court case that made a differentiation between debugging that doesn't qualify for the R&D credit and developing new software. Can you talk a little about that, where like you build an internal use software, it's built and the building qualifies, and then does the continual upkeep and debugging and solving problems qualify?
Is there new components? Yeah, could be. Yeah, if it's, is there risk involved? Is there, what are they doing? If they're just enhancing an existing software program, I think that'll be challenged. But if they make something new or new development, if there's risk involved, for software, I'm looking for risk.
Okay, thanks.
Who assumes the risk? So does the client, do they? If there's no risk involved, if it's not customized, I'm not sure if it'll work.
I have a waste client that took some of their old bins that are rear load. I don't know if anybody's familiar with trash companies. And he designed a way to turn them into like recycle bins where he welded two pieces together.
I love it. Yep. I've done a company called Clean Harbors, Waste Management, Safety Clean. Those are all waste. Now it's called environmental. But those processes are,
So even if he uses it he only uses it for himself, he hasn't like created any kind of patent or anything.
It doesn't have to be patent. Yeah. On that instance, if there's only one person involved, it's probably not much of a credit. I mean,
Okay.
it's one person. I probably, it's probably takes more time than it's the benefit. So, but if you have a team of people doing it, oh my gosh, absolutely. If that makes sense.
You see a big uptick in startups since COVID because of the PPE production or anything else that you're getting
Massive.
involved with? None.
Incredible. Yeah, incredible. And what's happening is a lot of the schools, we've done projects for MIT, Northwestern, University of Wisconsin, their funding, just lots of money. I mean, I thought it was all venture capital. I don't care about venture capital anymore. It's equity funding. It's the Kickstarters and stuff like that. And a lot in the medical, a lot of the app development. Food science is incredible. It's too much. It's pretty cool, but it's very generous right now. So.
Okay. Is there a contact information you could send up to our office, and we'll send it out? Send it out to the LIFPN. We'll send it out to all our members.
Oh, absolutely. Yeah.
Oh,
what I
great.
could do is, I got a couple pieces that are really helpful. One's shows typical qualifying industries. Okay, because that'll trigger your thought, and the other would be qualified activities. It means it's a real simple piece. It outlines if a company does this and this, they qualify for R&D. And if they don't, check the box. Okay, you don't have to waste the time. So I could share that. Excuse me, and that's a neat tool. So, but what we do a lot is we do a lot of assessment work. I mean, we do a lot of identify if a company's questionable, do they qualify, or if they've done it in the past. I'll get our team to provide an assessment, give you some numbers, compare it, and if it makes business sense, you do it. If it doesn't, okay too. Typically, what I hear is when I talk to companies, we don't qualify. We don't do R&D. We make widgets. We don't do R&D. Or we do engineering. We don't do R&D. Well, guess what? They're missing out. Or if someone says, we already did it. We did it a couple years ago, and we're good. Well, when you get more facts and talk to them, that's very inaccurate. If it was done a couple years ago, the laws are entirely different now. So, and there's in all this congressional horse trading, they threw in an R&D factor. They want to put they want to almost double the R&D. We'll see if that works. I don't know. They hit it, but it's that's proposed to increase the benefit. So, and the R&D credit's not going to go away because every country has it now. France being the largest, they have 50% credit. We have gross 14%. So it's very competitive globally. Everybody wants, technology, high-paying jobs. One other point: if a company and their IP is in another country, they still qualify. I don't care where their IP is located. So as long as the activity is right here in the States.
Bruce, a question. You mentioned about the utilization. We had a client who was a C Corp, had some NOLs.
Okay.
And they didn't really have the resources to, start banking the credits in anticipation of they will, use up the NOLs, but they didn't really want to pay for the R&D process, so to speak.
Right.
You're saying your fee structures utilization. If they're not utilizing the credits, how do you get paid?
Okay. What I do typically there is I want to find out if and when are they going to be taxable. I mean, if they're never going to be taxable,
Right. You would think
I have to work out
3
some
years.
sort of a fee arrangement.
Right. They would use up.
Yeah, I mean, if they're going to be taxable in a year or two, whatever, I'll negotiate something probably that here I won't get paid until you utilize it, but in turn, why don't you give me a 3-year contract or something like that? Yeah. So
very interesting.
Yeah,
Very-
I don't,
very good.
I don't, yeah, I have the luxury to negotiate the deals in the United States because I run the United States for the FI group. And it's my responsibility to build a practice.
Right.
So guess what? That's what I'm doing.
Mm-hmm.
So I'm building a practice, and I'm building a team. So
This company is in the printing business.
okay.
So that would qualify, you would think, right? They're always developing
some
new
printers
jobs.
do and some don't.
Right, okay.
Do they? I mean, it's just if they print over and over and over again.
No, I mean, advertisements,
Oh
financials,
yeah, absolutely. Oh yeah, absolutely. Yeah,
a lot of creative dynamics.
absolutely. Yeah.
Right.
Yeah. I mean, it's a lot of companies you can use the salespeople as part of the R&D process because it's conception to completion. If
Right.
it's a technical sale to get the business, guess what? Use their wages. It's
Thank
missed
you.
all the time. So.
Okay.
Is there
Does that,
any other questions?
make a little more
I'd say this
sense? A
is
little
certainly very
clearer?
valuable. You have a niche that,
Everybody an expert now?
Yeah. we know who to call. That's the best thing.
Oh yeah, use me as a resource. It's I've done it in a long time, and I have a great team. And compare. I mean, it's compare what we can do versus others. So
Terrific.
Bruce, I want to thank you. I would like to also point out, without his computer, he put this together, and I think you handled it great. So thank you. Just imagine what it would have been like if you had your presentation with you.
No, this is I'm sitting in my car, and on my screen it says unreliable internet access. I'm like, oh God, it's gonna crash.
Well, it made it.
No, thanks everybody for
Thank you.
for listening. I hope I helped and give food for
Absolutely.
thought. So
Thank you.
All right.
Well, the sun is out. I want everybody to have a great day. And any other comments or
Just a
everybody good?
comment. I guess the big takeaway from this morning's meeting, us on the line here as business advisors, the most important thing is for us to be able to identify opportunities for our clients to get the R&D credit. Where I would say most of us, I'll admit that I'm not capable of doing the study, but we need, people like Bruce and other organizations as resources that can help our clients achieve the credits and save a lot of money on taxes. But on the front lines, we need to identify the opportunities to bring them to Bruce's company.
We've got to be issue spotters.
Yep.
So
Okay.
thank you everybody.
Thank you.
I appreciate it. This is
Enjoy
fun.
the day, everyone.
So,
Thank you.
okay.
Take care.
Bye bye.
So long.